Okay, so the much anticipated CPI reading for August has just come in, and is this going to give us an indication of whether the Fed is going to taper? Let's take a look straight away. So just pulled up the report. We can see, you're seeing this with me for the first time, that we have got 0.3% increase in August. Now remember the consensus estimate was 0.4, so it's come slightly to the downside, which is good. We didn't want hot inflation, remember, so it's coming slightly lower than consensus. And over the last 12 months on the year-on-year figure, it's 5.3, which was exactly what consensus estimate was saying. It was saying 0.4 month on month, and it was saying 5.3 year-on-year. We've got 0.3 month on month, and we've got 5.3 year on year. So you can really see now, if we look on the month on month charts, it almost does look like we've gotten through the peak. We got this 0.9 reading in June, we got the 0.5 reading in July, and now August coming in at 0.3 really seems to suggest that we've almost, it is true what Jerome Powell was saying, in that it's been a transitory inflationary period. So we can see here on the year-on-year 12-month changes, we've just had our reading there at 5.3 versus 5.4 the previous month. You can almost see we're getting this flattening. We can almost see that we're getting this flattening of the curve here, okay? So you can see that flattening coming out now, and we want to see this come down. Had this reading have come slightly higher here, which is what we were saying in our video yesterday, if we were closer to 6, that would have indicated that inflation's coming in hotter than expected, and the Fed may well put their foot on the pedal in terms of tapering. However, we would have liked to see a reading beginning with a 4, right? Anything in the 4.9, 4.8 range would have really given the market even more confidence that we're definitely treading down. The fact that it's still quite high and it's kind of just leveling off seems to indicate that inflation is still quite high. Because remember, these are the changes, right? This isn't a fixed reading. This is the rate of change. The inflation still went up by 5.3%. Year on year, and it still went up 0.3% month on month. So things got 0.3% more expensive. But it's good to see that the rate of change, which is what we're looking at here, is starting to slow down and hopefully can head to the downside. Now, let's look at some of these items quickly to see what had the biggest movements over the period. So just if we have a glance down here, we can see, let's have a look. So you had, let's see if we can find the month on month table. This is always the useful bit to look at on a CPI report, is when you get the month-on-month table. Here you go. So July to August movements. Okay, so now we can flick down here, and you want to look at this right-hand side to see July to August, the month-on-month changes. What got more expensive and what got cheaper? So just having a glance down here, you can see fuel, that's commodities went up 2.7%. You got 2.8% on your gasoline. Okay, nothing major there. 9% on your airlines. And we spoke about this. Look at this, guys. Airlines have become 9% cheaper. So if we saw, we had 6% up, 12 down, 2 up, and now it's really tanked down and it's become cheaper now. And that's a good sign here for the fact that we have transitory inflation. Flicking on down, what else do we have? What else has moved? So we can see, this is all sensible movements, nothing major here. 2% on your flour for anybody baking cakes. We've had 2.3% on uncooked ground beef. Clearly that's in demand right now. 3.3% on bacon. 8% deflation on frankfurters. Okay, interesting. Now's a good time for those, huh? Time for some frankfurters. What else has moved on the inflation reading? Let's take a look. Any big movers here to note? What do we have? You've had a 4% increase in salad dressing. Stop buying that salad dressing, guys. It's going to finish you. 4%. Okay, look at that. 17% down on food at employee sites and schools. Interesting that that's come down. And we've had 17% up on window coverings. Anybody buying window coverings? 17% up on inflation. Dishes and flatware has gone down 4.6%. What else has moved? 7% on men's suits and boots and coats and outerwear. That makes sense. More people are going out. More people are going back to work, buying suits, buying sports coats, going out and about more. Interesting. Interesting that went up. 3% down on women's dresses, because we had such a high period there. If you remember in August, over the year, we're still 11% up. You had 3.8%. And 5% in May and 5% again in June. So it's natural that kind of tick down slightly here in this period. What else do we have moving? We have 3% on motor oil and coolants. Let's see. Nothing majorly moved here so far. Nope, nothing major there. Nothing major. 9% down on airline fares, which we've discussed. So there you go, guys. That is a good CPI reading. I mean, you know, we were worried that this was going to be on the slightly hot side, and this would, you know, mean that perhaps the Fed would have to start thinking about tapering. But what does this actually mean? So we've, you know, if we come back to the table at the top, let's show you that again. So if we come all the way back to the top, what does this mean? It means that month on month, we actually did get a leveling off. Right, you can see that there. We've got 0.8 and we've had 2 readings now coming down. So if you're Jerome Powell and you're looking at this, it doesn't really look like the economy's heating up. I mean, at this point, you would have been worried if you saw another 0.9 or a 1.1% month on month. That would have been scary, but it's ticked down to 0.5, ticked down again to 0.3. You've had a weaker jobs report. Year on year, you're looking like you've plateaued at the peak, and now you just almost want this to inflect down. You kind of wish you had a bit more of a lower reading, kind of 4.2, 4.8, 4.9 sort of mark here would have really given you that indication. But if you look at all items, less food and energy, which is this maroon line here, that's exactly what you are seeing. You have seen that drastically reflect down. Obviously, the all items are inflecting down a bit slower, but naturally that's going to include various items which we've just gone through, which have, you know, for whatever reasons during the pandemic, slightly risen up, and it seems to be transitory, which is interesting. What does this mean for the crypto markets? I mean, let's look at SPY first. So this is the S&P. S&P is responding to it very well. You can see, obviously, this is good for equities, as they think this could all be the nail in the coffin for the taper, right? If we've had a good CPI, we've had a good CPI report. Inflation is not heating up excessively. You've had a weak jobs report in this month. So if you're Jerome Powell meeting next week at the FOMC meeting, you're probably not thinking about tapering just yet, and equities seem to be liking that. Now, what's my bet for crypto is I bet crypto is reacting negatively. Let's have a look. Okay, so Bitcoin's rallying up. Oh, so I would have expected crypto to come down. This is a 5-minute chart. You've had a strong 5 minutes here. This is interesting. So I'm guessing, so normally the thesis is Bitcoin will act like a inflation hedge. I always question this, because people are saying it's acting like an inflation hedge. If it was acting like an inflation hedge, this would now go down, right? Because inflation came in on the weaker side versus estimates, slightly down, or meeting expectations, call it. And you'd expect Bitcoin to tick down, right? Because there's the fear of inflation is residing away. So you would expect to, at least on the 5-minute candles, some to the downside. Now, that's actually gone ahead and ticking up, which has me thinking that Bitcoin, I've said this before in previous videos, acts more like a risk-on asset in the micro. So in your day swing trading, Bitcoin seems to act more like a risk-on asset. When risk is on and people are moving from fixed income and your government bonds and defense stocks into high-risk equities, they also flock a bit more into Bitcoin. I think that's the behavior we're seeing more than the theory of this being an inflation hedge. I do believe in the macro, Bitcoin is obviously an inflation hedge, and you understand kind of where it positions itself in the market. But that's not how it's behaving. I mean, look here, a typical example, the CPI reading comes slightly less than expected. So inflation fears are less than expected. You would expect Bitcoin to fall because it's an inflation hedge, but it's gone up. Okay, so just my kind of initial thoughts around that. So you can take a look at SPY. SPY's heading up, equities are good. And now we just need to wait to see what the FOMC says. So we've seen an interesting CPI report there. We've come in 0.3 versus 0.4% month-on-month expectations, which is good. So the economy is not heating up more than economists are expecting. Year on year, we've had 5.3 versus estimates of 5.3. We can see that curve starting to level off now. And if what Jerome Powell says is correct about this being transitory inflation, we should start to see that continue to come down. Now, is he going to wait for more readings before making a decision on tapering? Is he going to make that decision at the end of this month? He's meeting on the 21st and 22nd for the FOMC meeting. We're going to find out. But my view on this is, with a weak jobs report and a CPI reading coming in cooler than expected, I don't think he'll be too keen to play around and begin a taper just yet. So I think this kind of rules out particularly a September taper, but October, November, we'll have to find out till we get those readings. So there you go, guys. A quick update on the CPI reading for August. Thanks for watching. We'll see you in the next one.